Picture this, you're at the hawker center, and suddenly your $5 chicken rice costs $7. That's inflation hitting your wallet. But while other countries struggled with soaring prices in 2024, Singapore managed to keep things stable. Today, we're diving into why this matters for your money in 2025. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've produced over 600 videos with more than 280,000 watch hours as of November 2024. I also focus on regional and world economy topics. Let's start with some exciting news about Singapore's economy. Our GDP grew by 4.3% in the last quarter of 2024, beating expert predictions of 3.8%. Think of GDP like your report card for the whole country, and we just scored better than expected. What's even more interesting is how this growth happened during tough global times. While other countries faced economic storms, Singapore stayed steady like a well-built HDB during monsoon season. Our full-year growth hit 4%, making it our best performance in 3 years. Now, you might be wondering, what does all this mean for your wallet? Let me break it down. First, let's talk about inflation, that sneaky thing that makes everything more expensive. Here's the good news. Our core inflation dropped to 1.9% in November, the lowest in 3 years. Remember when eggs cost almost $1 each last year? Those days are behind us. Take a moment to think about your spending. Have you noticed prices stabilizing? Drop your experiences in the comments below. The Monetary Authority of Singapore, or MAS, might make some changes in 2025. They control our dollar's strength, kind of like how you adjust your aircon temperature. When they want to fight inflation, they make our dollar stronger. When they want to help the economy grow, they might let it weaken a bit. Here's where things get interesting for property investors and homeowners. Private home prices jumped 2.3% in the last quarter of 2024. That's like finding out your flat's value grew while you were sleeping. If you've been thinking about property investment, this trend deserves your attention. Quick engagement check. Type property if you want a detailed video about navigating Singapore's real estate market in 2025. But here's what makes 2025 different. We're facing 3 big challenges. First, China's economy is slowing down. Since they're our biggest trading partner, this affects us. Imagine if your best customer at your online shop suddenly started buying less. Second, global trade tensions are rising. With Trump returning to the White House, trade relationships might get complicated. It's like playing a game of Monopoly where the rules keep changing. Third, geopolitical tensions are increasing worldwide. PM Wong mentioned this in his New Year message, comparing Singapore to a steady ship in rough waters. Let's talk about what this means for your investments. If you're holding Singapore stocks, you might see some changes. Our market usually handles global pressure well, but it's smart to diversify. Think of it like not putting all your eggs in one basket. Whether it's your favorite eggs from NTUC or premium ones from cold storage. For CPF investors, remember that your special account still gives you that guaranteed 4% return. That's like having a tree that grows money, rain, or shine. With MAS possibly adjusting policies, this guaranteed return looks even more attractive. Speaking of returns, hit that like button if you want to learn more about maximizing your CPF investments. Let's look at some practical steps you can take. Consider reviewing your investment portfolio. With property prices rising and potential policy changes coming, you might find new opportunities. Maybe it's time to increase your CPF contributions beyond the minimum, especially with the current interest rates. Think about your emergency fund too. While Singapore remains stable, having 6 to 8 months of expenses saved up is smart. It's like having an umbrella ready before it rains. For those investing in regional markets, watch China's recovery closely. Their economic health affects everything from our tourism to our exports. Remember how packed Orchard Road was when Chinese tourists returned? That's just one example of our connected economies. Here's something many viewers ask about. Should you buy more Singapore dollars if MAS loosens its policy? Well, our dollar might weaken slightly against other currencies, but remember, Singapore's long-term strategy has always been stability over short-term gains. Before we wrap up, let's summarize what you need to remember. 1. Singapore's economy is strong but facing global challenges. 2. Property market shows promising signs. 3. MAS might adjust policies to support growth. 4. Core inflation is under control. 5. Diversification remains key for 2025. Want to learn more about protecting your investments in uncertain times? Check out my previous video on recession-proof investment strategies. You'll find the link below. One final thought. While other countries worry about their economic future, Singapore remains what PM Wong calls a beacon of safety, security, and stability in a troubled world. That's something we can all be proud of. Remember to hit subscribe and tap that notification bell to stay updated on all things Singapore finance. This is Iggy from the Investing Iguana, and I'll see you in the next video.